The next portion of this lesson would be the break-even analysis. And usually when I ask my students, what comes to your mind when you hear the word break-even? In the past years that I've been teaching, most students tell me this, or actually sing this portion of the script's song. When a heart breaks, no, it don't break even. But in accounting, break even actually means that your costs and your revenues are even. It's the point when the net income is zero. So before I go deeper into this lesson, I just want to show a different income statement. Technically, it still shows you your revenues and your costs, except this time we have different terminologies. In the previous video, you learned about variable costs and total fixed costs. Now, here you will see that sales minus variable costs will bring about contribution margin. By definition, actually, contribution simply means that it's the difference between the sales of the company minus the variable costs that the company incurred. From here, we subtract fixed costs, giving us an operating income, or in other textbooks, this is called earnings before interest and taxes. If we are talking about break-even point, we want the operating income to be zero. Okay. Meaning, for that to be zero, your contribution margin, let's say that's 1, 2, 3, 4, 5. Okay, so let's say it's 12,345. If we want to make this break even, then fixed cost would also have to be the same amount. Okay. So if I'm going to restate or be more specific with this part of the slide earlier, actually break even in this lesson would be, it's when your contribution margin is equal to your fixed costs, and at that point, your operating income or earnings before interest and taxes is zero. Now let's look at contribution margin. As you've seen earlier, contribution margin is just the difference between the sales and the variable costs. Now, you can actually compute for the contribution margin per unit. So it says here in the PowerPoint, it's the amount by which a product's unit selling price exceeds its total unit variable cost. Or if we're going to express that mathematically, you have your sales per unit minus, okay, let me just put that here at the bottom. It's sales per unit minus your variable cost per unit. You get your contribution margin per unit. And then for the contribution margin ratio, this ratio will give you a percentage. So what you do is you just divide the contribution margin per unit divided by the sales price per unit, or the sales per unit. And then multiply it by 100, so you will get the percentage equivalent. Now for the break-even analysis, to get the break-even point, you can actually get the break-even point in units. What you can do is just divide the fixed costs by the contribution margin per unit. In the previous slide, you already know how to get this. This is simply sales per unit minus variable cost per unit. Or you can get the break-even point in pesos. You just divide the fixed cost divided by the contribution margin ratio. And the formula for this was already presented earlier in the previous slide. And so, to understand this better, let's look at the illustration. So let's say Riri sells soccer balls for 100 pesos per unit and incurs variable costs for 70 pesos per unit sold. Its fixed costs are 24,000 per month with monthly capacity of 1,800 units. First question is, what is Riri's contribution margin per unit? Perhaps it will be easier to determine the contribution margin per unit if we can actually identify the given items. So for example, this 100 pesos per unit, this is the selling price per unit. And then the variable cost of 70 pesos per unit sold, that will be the variable cost per unit. 24,000 is obviously the fixed costs. And monthly capacity of 1,800 units, this portion is just telling us that Riri can produce 1,800 soccer balls every month. Now we need to compute for the contribution margin per unit. First, we need to know how to get it. So if you refer to the previous slides, or if you look at your book, contribution margin per unit can be solved by subtracting the sales or selling price per unit minus variable cost per unit. Okay. Now, we already have the sales per unit. That's your 100 pesos. So 100 per unit minus 70 per unit, which means that our contribution margin per unit will be 30 unit. So that's the answer for the first question. Now, next would be, what is the contribution margin ratio? We need to get the CM ratio, and to do that, we need to refer to our formula. That will be CM, contribution margin per unit, divided by your sales per unit. So we've already computed for the contribution margin per unit. That's 30 pesos per unit, divided by sales per unit. That will be 100. And then, just to make this a percentage, we multiply 100. So times 100. And what we will get is 30%. So that's the contribution margin ratio, is 30%. So what it means is that for every soccer ball sold, the contribution margin will be 30% of the selling price per unit. Or in this case, that will be 100 pesos per unit. Now the next illustration asks us to get the break-even point in units and the break-even point in pesos. So it's the same given. You have 100 pesos per unit. That's your selling price per unit. 70 pesos per unit will be your variable cost per unit. And then fixed costs are 24,000 pesos per month. Okay, to show you how we will solve for the questions in this slide, the break-even point in units and the break-even point in pesos, I will present to you the income statement of Riri Company for the month ended January 31, 2011. So what I did here was to put in the accounts for this income statement. So we have sales, variable costs, contribution margin, fixed costs, and operating income. Since we are looking at break-even point, I set the operating income at 0. Now, what we can do is we can plug in the given items. So what we know is that the selling price per unit is 100 pesos. So that can be reflected here. We don't know the number of units yet, but we know that each unit was sold for 100 pesos each. Now, variable costs, we don't know the number of units yet, but we can see from the problem here is that it amounts to 70 pesos per unit. So each item costs 70 pesos each. So we put it here. And then for the fixed costs, that's 24,000. Okay. So let me just put in the operations here. Now, fixed costs amount to 24,000 pesos. Since we have a break-even point here, remember that your fixed costs and your contribution margin are equal to each other during break-even point. So we immediately have 24,000 here. Now, we need to compute for the variable costs and the sales. And what we can actually do is we can restructure the income statement. So if, say, a certain number of items were sold, then the number of units will be the same. So sales, the number of units here, number of units here, and number of units here will be the same, but we don't know it yet. And then it's at blank each. Now, this portion here, this one that I'm circling right now, is our contribution margin per unit. And how to actually calculate for that is just, we look at the selling price per unit minus the variable cost per unit, we get the contribution margin per unit. In this case, that's 30 pesos. Now that we know that, we can already determine the number of units that was sold. We simply use algebra. We know that the peso value is 24 for contribution margin. Divided by the contribution margin per unit, divided by 30, we will get 800 here. Now that we know the number of units here in the contribution margin, the number of units in the variable costs will be the same, and also in your sales. It's impossible that the number of units for these three items will be different because it wouldn't make sense. If you sold 800 units, then it means that you incurred variable costs for that 800 units and also gained a contribution margin from that 800 units. So now that we have that, we can simply multiply 800 times 70. We get the peso value for your variable cost. That's going to be 56,000. Okay. And then 800 units times 100 pesos each. That will give us 80,000. There. So what you can see here is actually you don't have to memorize the formulas. You just have to know your income statement. You have to know how it looks like, and you have to know, or at least you have to remember your algebra. And that's it. As long as you have this format, you won't get lost with this lesson. So that's it. Given that, I leave you to test your knowledge. You can answer short problem number 1 and short problem number 2 on page 140 of your workbook. And I hope you get the right answers. So I'll see you in the next video. Thank you.